Good morning. Today is the 21st of October. It's Tuesday and it's time for another morning routine video. So price moved towards the upside, touched the daily naked point of control, beautiful rejection there, and moved towards the downside, which means that we can also update our Elliott Wave scenarios a little bit. So we'll have a look at those later, because first we'll have a look at the time frame horizontals, but we do not yet have another daily, because today has to close red, and then we'll have a daily here at about 110.5. So we'll have to wait. So let's have a look at the volume levels instead, which means having a look at ATAS. So quickly boot up ATAS here. Yep. And then have a look at the point of control. Daily naked point of control. So we do have a daily naked point of control, and here on ATAS it is not touched. So this one sits at 110.7k. So we drag this 110.7k. Oh, just do this. Okay, 110.7, the previous range. Not surprising. And just double checking if on my chart it's touched. No, also here it is not touched. So okay, we have a level, and that's it with regards to the new levels on the chart. So we have one new level, and that is 110.7. And then we just have all the other levels on the chart. A weekly point of control down here at 106.9. If I remove the monthly naked point of control, we have a daily naked point of control, and then a couple of other stuff down below. And of course, some other stuff above price. But then we get to the Elliott Wave scenario. So we go back to a daily time frame here. Bullish scenario remains the flat. Nothing changes here. I don't really like to put wave Cs at particular lows. I just want to have the box as a general area of interest, and then observe the moves that we get towards the upside. At the moment, this structure to the upside looks like a higher probability corrective structure to the upside, being like a WXY, preferably a double zigzag, because of the first leg up, but we'll get there in a second. So this is a double 1-2 on Coinbase, right? So 1 2 1 2 3 4 5 4, and then get another 5. This wave 4 would then be a finished WXY. It would be nice in this count if wave 4 is finished at the high. If we look at the size of this wave 4, and we then look at the size of this wave 4, they're quite equal in size as well. So not too shabby. If I take a fib time, let's have a look actually. Yeah, so the higher degree 4 is just a little bit longer, which is perfect. It touched the 3A2 where it rejected as well in confluence with the daily naked point of control. It's nice. It's nice. So, ideally that high will hold, and this is counted then as a WX and a Y and a 4, and it moves down for wave 5. And just because of the nature of wave 4s and 5s, preferably you slow down a movement to the downside. So preferably wave 5 is not going to be very deep, where you're going to have this, and then this again. Preferably what happens from a structure point of view is that you basically create a bit of like a curved bottom, where price here is like slowly moving more horizontal instead of sharp, right? This is your sharp move here. Overlap, preferably here you have again overlap, right? Also trend and turn methodology. So preferably, in this wave 5, we get an impulse to the downside, which is the most common structure, but then you'll have like a 1, 2, a 3, 4, and a 5, and then move up. And I have a blue box here just because of the areas of support. So we have below the low, the value area low, daily naked point of control, and the range point of control at 96. So that is why I currently have the blue box, the target area for your wave 5 over here. And I'll probably just put the count on my chart, I suppose. I mean, this might go straight to the downside, so you might just have a bunch of 1-2s in the beginning, and then you eventually end with a couple of wave 4s and 5s. So of course, price can just move to the downside in a straight line and then eventually move up, and that's your wave 5. Of course, there's also a chance where you end your first structure maybe at the weekly point of control, you get a retracement, you get another move towards the downside, preferably not too crazy, too deep. Maybe ending around that value area low, daily naked point of control-ish area, maybe just below, but then you want to see a 4 and a 5, where 4 then backtests the value area low and daily naked point of control area. I preferably don't want price to move all the way down here if you go for a 3, because it starts to be very low, and then of course the final leg of your 5 should go to the low 90s before you then get a push towards the upside. And if you do finish here, of course, in a bullish scenario, you then expect price to eventually move back up and take out the all-time high. But in a bearish scenario, you can get, of course, a 3-wave structures. But because if a wave 5 would end at the lower area here, we got to be aware that the wave 4s of a lower degree is going to be a target area for bears. In an impulse, once an impulse is finished, and you expect a 5, a 3, and then eventually continuation in a 5, the 3 wave up generally retraces to either the wave 4 or the wave 2 of a lower degree. So therefore, the wave 4s and wave 2s is going to be the main area of interest for the bears. Minimum target for retracements is also the 0.382. And if I pull the fib here, you can see that the 382, if price would go down to 96, 94, 91, you can just see that the 382 is low, right? It's quite a low target, but that's a target nonetheless. So the lower price goes, for bears, you don't need a high retracement to still reach the targets and then move down. Even though people might then be looking for higher prices, you might never get them, at least, of course, in a more toppy situation where you then look for a top to be in and continuation to the downside. So got to be aware of how deep a 5 goes in this particular scenario and the influence it has on the context of what happens after, right? That in a bearish scenario, you could get a very shallow retracement, which will leave people on the sideline as they may expect a higher retracement back up to sell their positions, but instead you get a very shallow position and price goes straight down. That's something we'll have to observe at a later stage. But putting the support resistances back on, what would be nice, I'll for now just do something like this. But of course, we are aware that it can move to the downside in a straight line. Let me just dot this. Okay, so if it wants to create a 5-wave structure to the downside in one line, we got that sorted now with our beautiful artistic design. And we have a 5-wave structure. So we'll put these on the chart. There we go. So that is the double 1-2. A triple 1-2 adds another 4-5. That's the main difference. Actually makes me think, let's pull a fib here. So price missed out on touching the 0.382 from the high. So it is at the moment unlikely that you have a finished structure as long as you don't at least touch the 0.382. If we are looking, however, for a finished structure, then if we count a WXY and you move towards the upside here as a high probability scenario, the highest probability, where you get your W, your X, and your Y, you therefore can only have a flat as a larger structure, as a larger corrective structure. So you would need to have a wave A, B, and a C. There is no other structure where a WXY is the first subwave structure. You can't have a WXY, or it's not high probability, it's a WXY in wave A of a triangle. Or a WXY is not allowed inside a W. You have a flat, right? You can't have it in a zigzag anyway. So got to be aware of a flat. So when we consider this something that is finished, a flat is an idea. Now this is a very interesting scenario. Reason being that C is an impulse. which therefore mimics the price action of 1 2s, 4 5s, wave 5. But then the move towards the upside impulsive, so people be like, this is a wave 1 or a wave A. Instead, it's a wave C. And you do that. So the main difference with the bullish scenario is that your wave B is a 3-wave structure, not a 5. So we'll have to pay close attention on the subwaves, that if price takes out this low, is it 5 or is it 3? We'll have to keep an eye on that. If it is a 3-wave structure and price then moves back towards the upside, we got to be aware of flats. And of course, in a bearish environment, this could be the potential of larger moves to the downside. Let me clean this up a little bit as well. Just remove this here. Okay, there we go. Get the box, clean it up. There we go. And then we have your wave B target area. Minimum target is, I'm actually gonna, let me change my fibs here because, and this also has to do with the compendium. I said it in a recent video, but people that are morning routine video, I've never said this really public, but like too much, but I sent an email to Prechter about 2 weeks ago about the theory of flats, because I was bothered by the theory of flats, and I had an idea, like it's been bothering me for a while, because the practical application of running versus expanding flat is really annoying to me. So I was like, well, I think I have a better idea to distinguish the different flats. And so I sent Prechter a message with my thinking. I sent a long email. I said, hey, this is what you write in your book. This is how I see it and how I would change things in the theory of Elliott waves, to make it easier from a practical point of view, simplifying it, but without losing the integrity of what is a regular and an expanding flat, expanded flat. And I got an email, and he said, short answer, yes. And then he had a little bit of explanation. So he agreed with my approach on innovating the theory of flats to simplify it without losing the integrity. So that's going to be something that's going to be in the compendium book as well. So it will be the, I suppose, newer way of like the newest theory of flats, I suppose, as agreed by Prechter, which is pretty cool. So and basically, in a bit of a nutshell, now your target area for a regular flat is the 0.9 to the 105 for wave B, while an expanded flat, it writes in the book, they say, hey, it should be at least go to 105 to 138%, so the 1.38, right? If you get a wave B to the downside, you're looking for 0.9 to 105 for a regular flat. Nice B here, Koen, regular flat. And then the expanded flat should go, written in the book, should retrace at least beyond 105 to the 1.38. At least it's in the most modern book where they do summarize some of the rules and guidelines. In my book, they actually don't even write that. But in their most recent book, which is visible on their website, they do write at least expanded flat 105. And I was like, yeah, but it doesn't make sense to me. There's like, of course, I don't say that directly. So what's going to change is that we make things very simple. If you do not take the low, in this case, but you do retrace to the 0.9 and price moves up as an impulse, regular flat. The moment you take out the pivot high or low, it's expanded. That's it. We look at it as an expanded structure. The targets are going to change a little bit as well to simplify it, because the target for a regular flat and an expanded flat, the minimum target is the same. It's taking out the other side, the end of A. It's just that in an expanded flat, your maximum target is the 1.618. In a regular flat, you preferably get more of a sideways ranging structure, of course. But the moment price takes out this low, the target area is quite simply going to change from taking out the end of A to the 1.618 as the common target area. So even if you take the low over here by a little blip and price moves up, we're not implementing regular flat targets. We include regular flat targets. So we're not saying the most common target area is this for the regular flat. No, most common target area is the end of A to the 1.618, which is your expanded area. Because that happens, of course, right? You take out the start of A and then your wave C, instead of regular flat targets, it can extend easily as well. I've seen it before. So it just simplifies some stuff where, hey, you take out the origin of A, expanded flat. Retrace to the 0.9 or somewhere here in between before taking out the low, regular flat. If it's a regular flat, you expect regular flat targets. If it's an expanded flat, you take out that low, there's the potential to extend. So minimum target, end of A, maximum target 1.618. So it's just simplifying a couple of things. It's simplifying the difference between regular and expanded. It's simplifying the target area for the two as well. And in the end, it should help with practical implementation of flats. So basically, then the area of interest or the fibs, I have to change my fibs a little bit as well, because what's then going to happen is we have this pocket, this 0.9 to the 1 for the regular flats, and then we basically have the 1 to the 1.618. You don't want to touch the 1.618, but that is basically your expanded flat target. And of course, your common target would be for an expanded flat. I mean, it remains quite common to see the 1.236, 1.38. So basically, this would be like the Fibonacci template, which I might actually save now. How do I have it? Let's see, what is it? Wave B expanded flat. Yeah, so wave B. And then just let's just call it flats, just general. There we go. Okay, just simplify. So there we go. We got our flats. So this is basically our area. And then we want wave C towards the upside. Ta-da. And then we want, wave C should move up, and then that could be your 2. And then from a time perspective, that should work as well. Probably going to finish around a 1-to-1. The 382 is almost past, but of course we're not there yet, or maybe we are not there yet. Almost the next 4-hour candle. But we haven't touched generally a minimum target being the 382 retracement for a 2 or a B or an X. So, like preferably we do see price still move up a little bit further in this case. And a flat would be an idea that we put on a chart. This is then going to be 4-hour bear. This is, double 1-2. Yeah, is that bearish? No, it's not really. It's still a bullish scenario where you look for a bounce up. Now the bullish scenario would be a diagonal now. So this move to the upside, it does count best as a WXY. Some charts took out this high. Some charts didn't. Interestingly, here at the top. Now, the Coinbase chart yesterday was out for a little bit, so I have no idea how to trust the local price action there. But if I go to the index chart, you can see that on index, price here wicked above the high. Or did every chart now wick the high? Because previously, I just see it, previously on index, this was a lower high, but it looks like maybe on most of the charts, it has been taken now. Oh. Okay, nothing said. Last time I checked it yesterday, price didn't yet took out the high. So, and then of course we had the wick. I didn't check for the high again. So, okay, that's fine. And then preferably, of course, that's your C. That's your Y. in a bearish scenario. Bullish multi 1-2. Yeah, okay, we can we can remove that. I don't like that scenario. Also not looking here for a double 1-2 1-2 and continuation up. Second one is very long. This two is very long. Just doesn't really look nice. Now the bulls, what they are looking for at least is they need a diagonal or something. As the probabilities are higher, this is a 3-wave, WXY. Maybe you got to force an ABC in here. 1, 2, 3, get a 4, and your final move up there is then your 5. So let me check the time here. I think it was like between a 4 and a 5 fib time. Yeah, so this low here was made between a 4 and a 5 fib time, which is still okay to label this as a 4 compared to this being a 2. And then a 1, 2, 1, 2, 3, 4, 5, 4, 5. But if we have to have an alternative, then one would count 1, 2, 3, 4, 5. But if this is a 5, this needs to be a 5. So then you're going to move into higher probability ABC compared to a 1, 2, 1, 2. Just because the second leg up here is long. You can see it moved quite far beyond the 1-to-1 here. And I think time-wise, it's also longer now. So it's 5 times longer as well. So we don't really like that. So preferably it's a 3-wave structure to the upside in probabilities. And that means that for bulls, one really looks for a diagonal. You get a 3, you need a 3, you need a 3, a 3, a 3, and then eventually price moves down. So it starts by at least taking out this high. If this is higher probability WXY, or at least something we're aiming for, the bulls, the only option bulls have is a leading diagonal. The moment you take out this high, a diagonal is the only thing that works if you count a WXY. If you count an ABC, of course, you can get a bigger WXY. You can get like other structures still, including a diagonal. So in other words, the moment price takes out this high, without taking out the low, the bulls are looking at a diagonal, and the bears are looking at a larger corrective structure where this is going to be labeled ABC. And then you look for another 3, another 3. And if this is W, you can get an X, you can get a Y, WXY double zigzag, or you can get WX and then a Y like this, a sideways WXY. But that's what bulls are, or the bears are going to do, because they're looking for price to move down, take out the low, and therefore they look for 3-wave corrective structures even when the high is taken. But if you are not going to move down to at least a 0.9, then you can't get a flat ABC in here. If price is going to retrace to the weekly point of control and then move up and take out the high, bulls are going to have diagonal on their charts. Bears are going to have W, X, and Ys on their charts. Where this then has to be counted as ABC, which means this is a C, this has to be an A. It can't be anything else. I was talking about that a little bit in the group yesterday with people, where I said, okay, if price is going to take out this high again, we have to count this as 1, 2, 3, 4, preferably then over here you still moved up another leg, and then get a 5, because this is too long for a 4 now compared to the low degree 2, but it matches with this range. So it's like, if price moves up, takes out this high, we got to consider this now as a 5-wave structure, which means there has to be a 5-wave in here. And then someone asked me, I believe it was Joan, he said, but so how do you count a 5-wave structure to the upside here? And then I don't know exactly what I said. I said something in the trend of like, well, I don't really care, because there's no other way we can then count this move to the upside. So it just has to be a 5. Of course, I have ideas. I have 2 ideas on counting a potential 5 here, but they're both very itchy, of course, like not really great, because it very much looks like a 5, like a 3-wave structure to the upside here, 5 through 5, followed by this large weekend range. So definitely not pretty, but sometimes, like, as new information comes in, old information might become clear. And you don't need to, and this is always with Elliott Waves, you don't need to have the exact count and prices to follow the exact thing in order for you to have a clear directional bias and execute based upon it. So here we turned around at the daily naked point of control. There was a trend and turn move here locally as well. So that was great, moving down slower, decreasing volume as well, price rejecting. Some bearish CVDs, as Douwe noted in Discord as well. So there's opportunities to be had, and now it's just management. And arguably, we're looking for a similar thing down here, where you have your bunch of 1-2s, you get your 3, preferably you still get a couple 4-5s or at least one more. We still have the weekly point of control down here as well, so we can observe if price does anything at the weekly point of control. And yeah, maybe we get a bounce to the upside, and then we'll see. Step by step, but probabilities would be better or nicer for this to be a WXY to the upside. And this is then quite simply what bulls would look for, is a three-way structure to the downside, ABC, or look for 1, 2, 3, 4, 5, correction, go back to the daily naked point of control, the new one that we have here, and then 1, 2, 3, 4, 5, go down, and then eventually go back up, basically, to create that diagonal. So we can just keep this here on the chart. We can count this as a 1 hour diagonal. Okay, so there we go. Bearish, bullish, and yeah, bearish alternative is a larger corrective structure. I'm just wondering if I want to have this on my chart already. Like that, it would be something like this if you take out the high. Yeah, let me just put it on 1 hour WXY alt bear. So this is definitely a bit preferred. Otherwise, we have to do this, and then there has to be some sort of ABC in here, of course. Then that's your W. You're getting your X, and then you're getting your Y. And if you do take out that high again, the bears are looking for after Y down. Bulls are looking for another move down and up again. That's the moment where the bears start to struggle. Okay. Okay. So we shortly zoom out just to see if things are clear. So we have, let me do this, and that, and that. We have the double 1-2. We have the bearish scenario. Would be similar price action, move down and then move up. Also here, move down, then move up, and then we'll take it step by step. Most bullish scenario is, of course, a finished structure here, where this is a finished 5-wave, but then you create a diagonal. 1, 2, 3, 4, 5, 1, 2, 3, 4, 5, correction, continuation. It's a bit too early, really, but that would be your bullish take. I need to organize my stuff as well. So in a bearish scenario, this is a WXY, or not bearish, we put that there. And then what we're looking for here is a 1, 2, and then eventually we get a 3, a 4, and a 5. Currently, you don't want price to move to the 0.618, preferably. Yep. So look for a 5 down, then a 3-wave up, and then continuation to the downside. So we can use the arrow. Where's the support here? Yeah, so we get 4, we get a 5, maybe wick below. Then you get a 3-wave structure to the upside. Maybe you're going to fill the gap, move up a little bit, somewhere here. And then you look for another leg to the downside, of course. There we go. Bum, bum, bum. It's nice when there's a bit of information that changes some stuff. Yeah, you actually have something to do in the morning. Okay, so we have that scenario. This scenario matches continuation down in an impulse. This scenario also matches the bearish scenario because this can then be A, B, C, and then eventually you move back up. So that's nice. That's nice. Okay. And then we have this scenario where we need a three-wave structure to the downside. So in that case, if price can now move up and touch the 618, probabilities are higher. This is a three-wave down. If we don't get a wave 4, a local range, similar in size compared to the 2, that is. So if price just does that, then this becomes a three-wave, which then means you're going to be looking for either this WXY or the diagonal in the bullish case. So let's just keep it simple. Preferably it doesn't. And you just get a 5 down, 3 up, 5 down, just, you know, for the sake of simplicity, please. So we can keep that on the chart. And then, yeah, okay, WXY. And then we have the diagonal. That's your bullish scenario, where basically this is your invalidation. And then you're looking for a wave 1. And then 2, and then 3, and then 4, and then a 5. Let's make these a little bit more visible. There we go. And you're looking for preferably a deep retracement, maybe with a bit of an extended C to make people scared, and eventually, ta-da. Nice. Okay. Not too shabby. Okay. So, flat wave C, bear market talk, 4-hour time frame, move down, preferably counted like this, finish wave 4, get a 5-wave impulse down, WXY in 4, bearish scenario, WXY inside wave A, you're now working on B, and then wave C should retrace to the 0.9 minimum, 104.3. Yes. If price moves to the downside in a three-wave structure here, then we're looking for the bears a larger WXY, and the bulls are looking for a diagonal. And the diagonal is either wave 1 or wave A. That's something we'll then figure out as we get more information. So that is it. And then probabilities. So on the weekly time frame, nothing changed yet. So on the weekly time frame, still bullish till we have more information. On a daily time frame, therefore actually also still bullish, but on a daily, we're primarily first looking for the flat here. And the bear market talk is secondary because we just need more information, and price did not yet retrace to at least a 0.302 taken from the high to the low, which would be a minimum target for a retracement in a 2 for let's say a bear market. So preferably you still move higher, preferably not yet finished. So we just stay on the bullish side as long as those type of things are not confirmed. On a 4-hour time frame, I guess we just go to the 1 hour. As it stands here, this structure to the upside looks incredibly 3 range up, down, and then you have your next leg up. So it looks very WXY-ish. And price did retrace at the daily naked point of control. Nice move down, some bearish CVDs. So you know, all according to the Elliott Wave Scenarios shared yesterday, basically, like, hey, this is preferred and it's respected. Now we observe the move to the downside, preferably get some more 4-5s here into support. Price slowing down. So we have the highest volume, make a couple of lows, a few ranges, decreasing volume into support. That's nice. And yeah, so preferably this would be a WXY. Alternatively, this is counted as an ABC. So preferably, you have a finished WXY to the upside. You now get a 5 down, 3 up, and another 5 down, and you take out this low. Alternative is that this is an ABC, and you're either looking for a larger corrective structure or you have a diagonal. These are both alternatives. And in both cases, you honestly kind of like just want to take out the high again. Because if you take out this high, you can't get a WXY in here anymore and you know, look for the lows, the minimum target being the 0.9. You can only count a WXY in a wave 1 of a diagonal. So the moment you take out this high, the WXY up here either reduces in probabilities or you have to have it inside the diagonal. So either you're going to count ABC or the WXY is a diagonal, first wave of a diagonal. So yeah, that's that. What I'm looking for, I suppose, locally, if we toggle on again the areas of support and stuff, oh, we can remove the order block now. It's been tested and retested, so all good. But what would be nice here is quite simply the trend and turn methodology. We get the 1-2s, we get the 3, preferably some 4-5s into support. Let's see if there's another level here. And then we wrap things up. So let's see if there's a daily level here. I'm just checking the PVP to see if PVP has any. Oh no, this is a PVP level. So volume profile. I just want to check if we have more going on. Value area low is down here. Might be interesting to put on the chart. Might be interesting. Let's take it from the low here. Let's take one from the start of the range till, let's take till the end of the range. The value area lows are very. I'm interested in the value area lows basically. That's what I'm checking. Just pulling a couple and see where they end up. Okay, that one is very low, and we include that price action. Yeah, okay. So with regards to the value area lows, we have a little bit of a pocket here and a little bit of a pocket there. So I'll just, what I'll do is create a little box here, make that white, and then extend to the right side, and same here. And it's very tiny boxes, but it reminds me like, okay, there is still at least something. And the main reason I do this and put these on my chart is in case the weekly point of control from the PVP indicator, this is a PVP level, in case that fails, like you can see the size of the first two. Preferably we count a bit of a multi-one here, like 1, 2, 1, 2, 1, 2. And then price starts falling. So preferably you get a couple of more 4-5s. If you get 1, 4, and 5, of course we could get a bounce at support, but we have to be aware you could get a few more 4-5s. And then I'm like, if I only have this level on my chart, I'm like, okay, but where's my next area? And now I have some areas. So it just gives a little bit of context If price would move below the weekly point of control, at least I have two boxes where I can pay a little bit of attention and know that something might happen there. So I'll just put this in the naked point of control box here. And yeah, that is what I am looking for. This is an ABC. Of course, we don't need to have this larger fall. We do want price to slow down. So what's happening now is actually good. And if price takes out this low, we do want to get another low on decreasing volume, preferably. And then decreasing, and then it could be interesting to look for a bit of a bounce at one of these levels. Weekly point of control is first. So, yep. We will have an order block, I think, on the chart, just noticed, which is a 30-minute, I guess. Is it? Yeah. I mean, we do have this going on here, so I'll put this on the chart, put it in the order book folder. This is a 30-minute time frame. It's like one green candle, and then price drops again. It's not very clean, where it's just like one candle and then quick drop continuation. You have one little red candle and then price drops. But I don't have, 45 minutes only shows red. So we'll keep this one in mind still. So okay, we found that one. And that's that. So yeah. Ta-da. Of course, this is a longer video, but a lot happened, and this is Elliott Wave Analysis. When not too much happens or things go according to plan, then you don't really need to change too much. And I can talk a lot about other stuff, but on days like these where price is moving, I wake up, price is moving, and probabilities played out, touching resistance, daily naked point of control, and fall down. We can really innovate accounts and update accounts, and yeah, hopefully you find this useful. Like the morning routine seems like it's we check, of course, the data, and many people are watching the morning routine, which is good compared to the size of the members, and it's hopefully just very educational, where you really get insight into, I suppose, my approach on Elliott Wave Analysis, my thinking process. You're basically picking my brain a little bit on, hey, I see this, so this, and then if this happens, then this should be the count, and what am I looking for here, and this and that. So yeah, hopefully it's just useful, and you see the approach, you can copy the approach, you can maybe do your analysis together with what I do in the routine, and then eventually things become a habit. Like in the beginning, it might be tricky, and you're like, okay, well, you're stopping the video 100 times just to like put the things on your chart and basically follow my thinking process. But give it a little bit of time, and eventually things become like a habit, and you'll have a similar approach to reading the chart, and then if this happens, then this, then this, then this, and then this are probabilities. This is what we're looking for. If price takes the high, then we have to think about this. Like it's a puzzle. It's playing a game with the chart. So playing a game with the chart. Now, that being said, though, hopefully again you find it useful, and yeah, tomorrow is going to be another morning routine. So thanks for watching. See you at the next one.